Good evening, traders. This is E after market hours on Tuesday, the 3rd of March. Just a quick review. We noticed early morning, got to our desks, we were taking a look at relationships. We always like to see relationships between yesterday's range and what might happen with today's range. Noted that the 16 resistance we had called for at the end of the day had held overnight, and we were pulling backwards, presumably to test the 8 region and perhaps the 6.5 to 7, which we'd called as our squeeze pivot at the end of the day on Monday. We try to make note of potential target areas if that breaks. We felt that any low could be tested, including the low from yesterday. We noted first you'd have to get by, obviously, this 2.25 region, which was yesterday's angel. We chose the 11 to 12 area as resistance at the open. It just conformed to a few ideas that we have. I'm probably the only one on the planet that does not use market profile. After hours, I noted that evidently was a big deal, 1075, according to that methodology. Truthfully, I was more concerned about this relationship here and a number of other ideas that our system picked up on. So we felt the 11 to 12 should be resistance at the open. In Psychology Day, we really wanted to see it take out the low. We thought first, let's go see if we can get down into that 5 to 2 range, and then below that, perhaps do some more damage. But we like the idea today of law of alternation. And yesterday came out shooting and went and ran to a new high. We thought today it would do just the opposite. You'll note on the rebound after the lows today how we came back and retested that zone, that 6.5, 7 area that we thought was supportive yesterday as a squeeze pivot. Once we broke it, it opened the door for new lows. And then the rebound came and retested that beautifully. On the 5-minute chart, we were underneath the blue line. We thought that was the key for the open, and if the green line came down and was able to knock it down, we thought that the first primary target should be the 02s to 2.25, and after that we could get a bounce, and the key would be, do we take out the low or not? Whenever we get continuation in the morning, then we look for a contra in the afternoon or at lunchtime. And when we set down here at that 96.75, 96.5, that was our primary target, at least mine. Zeke had a target of 94 and 95 area, and we felt that this was the prime target, and be careful of a bounce. Once we got the bounce back into the lunge range and came out the top, our rain line was our proposed target. Come back and try to hit the rain line and probably hold this IB. I felt the low was in. Once we got a rock and roll and back above this blue line, I said, let's consider at this point that the IB low is support, and we'll trade in a narrow range in the afternoon. And that conforms certainly to our idea about trading in the pipe, this yellow box right here. That 95.5 was a perfect measured move that we had. I noted the stochastics were kicking off at the green line. They had hit up here yesterday. We had chosen that 16 resistance. And today we felt that this probably would give us a bounce and install into that 7 region. We thought that was a high odds trade. Use the 8 and use 11 as your stop if you're trying to short coming into that 6 to 7 zone. Same signal over here, you can see on a little bit deeper chart, the 60. And we were touching down and bouncing back into the mid-uni, which we felt was resistance for this end of day swing. On the gap chart, this line has been there for the last several days. In fact, since last week I said we will test the middle of this breakout bar. It's just a matter of when. Today was that day. This was a high odds target, and once we got near here, we did not want to mess around, and we said this risk reward really to a legitimate target of 93. You're risking a couple of points this way, or 2 to 5 to 10 points on a bounce the other way. So we felt risk and reward really came in, time and price, and that's why I advised traders to take profits and assume the low was in once we're able to get back up and breach that 02 again. On the bounce, we noted this squeeze pivot at 01. We thought that this would be support for the rest of the day. If it got taken out, then we could revisit the lows, and our expectation was this 7 to 8 zone was resistance. We note that we can go above the rain line a little bit, but the real key is, can we come back underneath it, and then what is the relationship with this blue line? We try to be realistic with a number of different jurors that give us some confidence. The 11 was our pivot today. That's why that zone this morning we felt was resistance, using the half gap area as resistance. And once we broke that 650, potential target to come down and test that 96 area, that's 2. Very simple methodology, and this is one of the tools we use every day. We noted in the Fibonacci charts the 456 got us back to a 60% retracement. We felt very strongly that there was confluence there, and advised all of our longs to take profits coming into that 07 and a quarter based on this relationship. Put the rain line in the same location. It was a high odds target to make sure you get paid, especially time and price. Who wants to take a great long side trade and then squander profits without taking something off the table? And that caused the sequence trade, we felt, for the end of the day. We all learn with different modalities. Some of us are kinesthetic learners. I know I am. Others are auditory. Still others learn visually, and or any blend of these. And sometimes I think it's important that we present information in different formats so that traders can access these resources using the way they learn best. Most traders, perhaps not most, but many traders are under the influence of sway. They develop a strong bias and then try to defend that opinion. We talked today for a while about traders who may or may not sabotage their own efforts simply by digging in their heels and being stubborn and saying this is what's going to happen, and try to defend that thesis as opposed to just relaxing and finding the natural rhythm of the market. This is a great book, Sway. I really recommend it for traders if you've not read it. Will open your eyes to some of these psychological ideas that hold us back as traders. This is E for E-Mini Wizard and Marketwizardz.com signing off. Hope you had a great day, and we'll catch you on the next one.